I know that you must be familiar with this, and this, but are you familiar with this, and this? So one thing that many new traders don't pay attention to is something called spread. But the truth is, spread can quietly affect your profit. You might enter a trade at a perfect moment, but if the spread is too wide, your trade actually starts in a lose immediately. So today, I decided to take a closer look at the spread offered by Plutus Trade Base across different currency pairs. What I noticed was interesting. The spreads are very tight across most pairs, and even Asia currency pairs keep tight spread even when we are not in the Asian trading session. So in this video, I will show you what that means, why it matters for traders, and also explain the important rules that liquidity providers play in keeping spread low. So let's start with the basics. What does spread means? You know, every currency pair in trading has price. One is the buy price and the other is the sell price. The small difference between these two prices is called the spread. For example, if the buy price of a pair is 1.1002 and the sell price is 1.1000, the difference between them is the spread. Whenever you open a trade, you automatically pay this difference. That means your trade starts slightly negative before the market even moves. So the smaller the spread, the better it is for a trader. Again, so I check several currency pairs to see how the spread behave. First, I look at most popular pairs like Euro USD, GBP USD, and USDJPY. These are called the major pairs, and they usually have the most trading activities. On these pairs, the spread were very tight, which is good for traders. Then I now move next to AUDJPY and the GBP/JPY. These are called cross pairs, and many platforms normally shows wider spread here, but the spread were still relatively tight. Then I check something interesting. Asian currencies pairs like AUDJPY and the NZDJPY. Usually these pairs have wider spread when we are outside the Asian trading session. But even during the London and New York session, the spread stays surprisingly stable. So why does the spread stable? Why are the spread tight? That's a very big, reasonable question to ask. So this is where the liquidity providers come into the picture. The question is now, what is a liquidity provider and what role do they play in making the spread tight? So first of all, let's start with liquidity providers. Liquidity providers are large financial institutions or banks that supply, buy and sell price to trading platforms. Think of them as the company that keep the markets running by constantly offering price for traders. When a trading platform has strong liquidity provider connected to it, there are always many buyers and sellers available in the market. Because there are so many participants, the difference between the buy price and sell price becomes smaller. And when that difference is smaller, traders get tighter spread. Now here are the reasons why tight spread are important. A tight spread can make a big difference in trading. If you are a scalper, meaning you take many small trades, tight spread helps you keep more of your profit. If you are a day trader, tight spread also help you by improving your risk to reward ratio, because it will make you to start a trade without a big loss. It is a very big disadvantage for a trader. Even if you are a beginner, lower spread simply means you lose less money to trading cost. So here, in comparison, in many profits, spread on smaller currency pairs or Asia pairs can become wider, especially when the market session changes. This can make it harder for traders to execute their strategies. But what stands out here is that the spread remains fairly tight across many different pairs, which can help traders trade more efficiently. After looking into several currency pairs and observing how the spread behave across different trading sessions, it's clear that tight spread can really benefit traders. A big reason for this is strong liquidity providers that help maintain competitive pricing in the market. And for traders, especially those who cares about trading cost, this can make a noticeable difference over time. So finally, Plutus Trade Base has the best spread for traders who are always getting stop out due to spread, and those that always start their trade with loose due to huge spread. I will advise you to try using Plutus Trade Base and thank me later. So in case you have any question, you can drop it under the comment section. Thank you everyone.